to the Accountancy Learning AAT sample paper walkthroughs. I'm Sarah, and in this video I'll take you through the Principles of Bookkeeping Controls Sample Paper 1 Task 1. So this task is about using control accounts. A payables ledger control account balance is shown in the general ledger. Identify which one of the following is correct in relation to the payables ledger control account. We're given 4 options. First one, a payables ledger control account enables quick identification of the total amount owed by the business to suppliers. So this is total amount owed by the business to suppliers. We're looking at the payables ledger control account. So the top one is in fact our answer. So the payables ledger control account gives us the total amount that is owed to our suppliers. Let's just run through the other ones though, just to make sure that our answer is correct and why the other ones aren't. A payables ledger control account enables quick identification of an amount owed to a specific supplier. So for this one, this would actually be your payables ledger. So not your ledger control account, it'll actually be your payables ledger. The third one, a payables ledger control account should always be produced by the same person who produces the subsidiary ledgers, as this improves accuracy. So this isn't about really who's doing the role, but we should have some segregation in our role anyway to prevent fraud and things like that. So this wouldn't necessarily have an impact on accuracy. And the final one, a payables ledger control account enables discrepancies between the bank and the subsidiary ledger to be quickly identified. So here we're talking about bank and subsidiary. So the payables ledger control account wouldn't be involved in that. Next, you work in the accounts department of Sturco Limited. Your manager has run a report which shows a credit balance on the VAT control account at the end of February of 3,800. The credit balance at the end of January was 8,710. Your manager has asked you to prepare a VAT control account to explain why February shows a lower balance. So we're given the VAT control account and you've got drop downs in the exam to choose from. So we can see here that the end of January balance, 8,710, is our balance brought down. And our VAT control account at the end of February is 3,800, which is our closing balance, which is already given to us in the question. So now we need to put in the information that we've got here on the left into our control account and then prove that the balance carried down, the closing balance, is 3,800. So VAT on sales, so this is the sales that we've made to customers, so therefore it's a liability for us to pay HMRC. So that would go on the credit side of our VAT control account. So remember, anything that increases the liability will be on the credit side, and anything that decreases the liability will be on the debit side. So VAT on purchases, so this is what we're going to claim back from HMRC, so that will reduce our liability. VAT on sales returns, so if you think about the sales that we've made, which we've put on our credit side, it's going to be the opposite to that, because we're having customers return things to us, so we're going to give them a refund, so therefore we don't have to pay that over to HMRC, so we're going to reclaim it. So that will reduce our liability. VAT on purchase returns, so again using that same thinking, our purchases reduce our liability, but if we send something back and get a refund, it's going to increase the liability because we've returned that item. So we've got 80 there. Now, discounts allowed, so these are discounts that we are giving to customers, so therefore that means that the amount that is owed to HMRC is going to reduce because the ultimate sales invoice is going to be lower. So our discounts allowed will reduce our liability. And then likewise discounts received, so this is going to be the discounts that we get, which will increase our liability because it's reduced the amount that we're paying. So we need to put that on the credit side for discounts received. Then we've got VAT on cash sales. So this is a type of sale that we're making, so that will increase liability to HMRC. Any type of sale means we'll need to pay over. We're collecting the VAT on behalf of HMRC, so we need to pay it over to them. And then finally, payment made to HMRC. So that's going to come out of the bank to reduce the overall liability. Now, to make sure that you've got your figures in the right places, you can then prove whether your carried down balance is correct. So we're given that in the question, and to do that we would need to balance off the account. So if you added up all your credits, you would have 13,770. You would put that on this side as well, and you would find that the difference is 3,800. So therefore that's your carried down balance, your closing balance. GAL Limited has the following receivables ledger control account. What will be the balance carried down on the receivables ledger control account? So we're looking for this figure here. So we're going to balance it off. So as we've got our carried down balance, so our closing balance, remember carried down is the same as closing balance. We've got 59,390 on the debit side, so we'd take that over as our total on the credit as well. And then we're going to find the difference of what we've got here to our total, which gives us 28,890. So therefore that would be our answer. And with that, we are then at the end of task 1.